Hello guys, and welcome to my YouTube channel once again. All right, so in today's video we'll be looking at how to what to look out for when you are marking out zones. All right, so things you have to look out for when you're marking out zones that you expect the market to react, and also you can take actions or trades from those zones. So while marking out the zones, there are things you have to look out for. In this video, we're going to be looking at boom 500 index, and as you can see, I'm on the 4 hourly time frame. All right, now if you look at what we have right here, you can see we have a zone somewhere here. There's a zone here. Now for this zone, the whole of this is actually a zone. The whole of this is actually the zone. The reason is because you can see market bought from this level, market also sold from this level, sold from here too, sold from here, also bought from here. So the whole of this is a zone. So most of the time, when you mark out zones, you need to consider that it could be a very large area. You understand? Then until the market is able to finally leave that particular area in a particular direction, then you can confirm the market has actually broken out of the zone. All right. And also, you should also notice that if you adjust this zone to somewhere here, there's nothing wrong with it, especially for the fact that the market is selling from this point. Market is selling from where? From here. You can see market sold from here, and sold from here. So what do you want to see? You want to see that the market has finally broken out. And this is another thing I need to, before I even go to that, let me show you something, guys. All right, let me get a horizontal line. I'll put here. Why I am putting the horizontal line here is because, as you can see clearly, the above this line, all we have are wicks. All from here above this line, what we have are candlestick wicks. All right, then you can see the only time the market was able to go above this line is with this bullish candlestick, and after going up with this bullish candlestick, it still continued going up, then sold back, then it went back up. All right, so now this is an indication that the market can possibly start buying as it's supposed to be, because from the consolidations we have here, we're expecting the market to break to the upside, right? And there's a kind of an impulsive correction. If you look at it, like kind of zoom out, you'll see there's an impulsive correction from here. Here is a lower high, then the market started buying. All right, so we can easily place a trend line here if we want, but that's not what we are looking at for right now. So you can see you have to wait for the market to actually, once the market closes above this zone here, it is an indication the market you will want to buy. Then you cannot just enter the trade immediately, because of the fact that we have all these other weeks here. The market can easily get to this zone and reject. You see that the market can just buy after closing above this horizontal line. The market can just buy on getting to this zone. It rejects because it's what it has been doing previously. So you don't rush to enter the trade, you have to wait. And it's a market, but even when it broke above this zone, it got to this level here. There's a support turn resistance around this zone, which the market got to, and it sold back to the downside. All right, so after that happened, you can see the market finally, after the market finally closed above this zone. This is the only zone you really want to see the market closing above before you can confirm that the market has finally broken out of this consolidation. See the market after closing above with this particular candlestick here, the next candlestick was bullish. Then we had a one candlestick pullback. Then the market bought. All right. So even at the pullback, you might be, you can just wait after the pullback. For my students that understand the engulfing candlestick strategy, you understand that you can easily enter a trade immediately on the close of this bearish candlestick right here, and it buys nicely. Why will it buy? This is a strong zone that has been broken, so this is a retest, and the market now is ready to buy. All right, then if you also go down to maybe the 15 minutes time frame, you also notice something. Let's go down to the 15 minutes time frame. So on the 15 minutes time frame, this is where we had the breakout. This is where we had the breakout. I want to show you guys something very important here. All right, look at where we had the breakout here. The market broke out. Then now, this thing is this, guys. If you just open this chart on the 15 minutes time frame, then you saw this structure here. What is this? You will be seeing a head and shoulders pattern, right? This you will see this as the left shoulder, you see this as the head, and this as the right shoulder. Then you'll probably be having something like this to mark out as your neckline. you're marking out something like this as your neckline. If market breaks and closes below and maybe does a retest, then you want to take a trade, right? Like here you can see, let me see if I can really zoom in much. Okay, you can see the market broke and still closed below. Then it sold a bit, then spiked and closed bullish, and then the next candlestick was bearish. Trust me, you would have wanted to enter a sell trade at this point. You don't wanted to enter a sell trade at this point, and the next thing you'll be taken up by spikes and spikes and spikes. So how do we help this situation? How do we help this situation? First of all, remember on the higher time frame, on the 4 hourly time frame, the market is going to buy based on we are having a breakout and it is supposed to be a retest. So what we are having here is supposed to be a retest. Regardless of this structure you are seeing here on this lower time frame, what you are seeing on the 4 hourly time frame, which is a retest with one bearish candlestick, is what you're supposed to consider. And in that case, you will want to wait for the bearish candlestick on the 4 hourly time frame to close before you think of entering a trade. Because if you wait patiently for this bearish candlestick to close, you won't have that trouble. You won't have that problem of being taken out by spikes. You see, after the market closed above, then the next candlestick closed bearish, which is this particular one. Then if you could wait for market to do that, then you'll be safe. And secondly, you have to remember that there is a zone here too. There is a zone here too, which is causing the market to form that head and shoulders pattern. There is a zone here, right? There's a zone here which is actually causing the market to form that head and shoulders pattern. If you go to the lower time frame, you will see. Let's check it out. Let's check it out, guys. Okay, that is it here. Let me show you guys. That's the first zone at the top. You can see that's where the market is reacting with. You can see. So if you look at this structure here, let me remove this, and you feel the market would want to be selling, you see you'll be losing so much money if you enter after this breakout and this one candlestick retest, because the overall direction of the market based on our higher time frame analysis is bullish. So in that case, what do? You wait for the market to sell. If you come down to or want to enter the trade on the 15 minutes time frame, you can see there is this particular structure here. This is called another block. Usually I don't trade other blocks, but I don't do videos about other blocks because it's not because of anything, but I use them sometimes in my setups to take good entries. All right, but you can see what happened. The market had to come to this level first, and hitting this particular order block here. Let me take this and put it right here. On market hitting this order block, okay, you see it reversed. On hitting this order block, it reversed massively. On hitting this order block, the market reversed massively. So why would you consider this? Because it is the only bearish candlestick that was formed before the market took this particular high. So you just take note of this and then enter. That you are kind of combining price action with ICT to trade at this point, guys. All right, why I'm saying so is this: if you see this structure after defining the direction of the market based on your analysis on a higher time frame, then you come down to the lower time frame to see a structure that looks like the market is going to be going in the opposite direction. Just wait for the market to come to any structure that looks like this, and trust me, the market will most likely reverse. Because if you want to follow this structure you're seeing on a lower time frame, you'll be taken out by the market and you'll be in deep losses, guys. You'll be in deep losses. All right, so you have to always take note of what you see on a higher time frame. At some point, it's even best to always stay on the higher time frame on your analysis, and after analysis, then you only enter a trade if you see a confirmation, or you see a setup on a lower time frame that is in line with the direction of the market on the higher time frame. Like we had a bullish breakout here on this 4 hourly time frame. If you go down to 15 minutes time frame, look out for only bullish setups that indicate the market is going to buy. If you are misled by the setup you see on the 15 minutes time frame, or you have deceived because you most likely see setups like the head and shoulders pattern we saw on the 15 minutes time frame, you will lose your trades. You will feel head and shoulders pattern do not work. is just because you did not confirm the direction of the market on a higher time frame, or the structure was not in line with the overall direction of the market on a higher time frame. All right. So similar thing happens somewhere. I think I saw a setup somewhere here. Okay, let's look at this. Let's look at this particular one right here. Something here to look out for. Now, if you want to mark our zone, you see this. This is another thing, because marking out zones is very important. Now, you can see the market has been buying from this zone. Market has been buying from this zone. You can see market came back, rejected at this point, created a bullish candlestick, but the market came down again. This time around, it sold. After closing below, the next candlestick still sold. Then later, but then later sold and closed bearish. The next candlestick, after trying to sell, spiked and closed here on the range, and the market went up. Now, this is actually a fake out. This is actually a fake out. This fake out, if you go to a higher time frame, you'll notice that what you are having here is not actually a candlestick. It's just a wick. If you go to the daily time frame, just that the one we saw on the 4-hourly time frame, when we saw on the 15 minutes time frame, those candlesticks we saw on the 15 minutes time frame, on the 4-hourly time frame, is just a candlestick wick. So or here on the this one here on the 4-hourly time frame, what we have here is not an actual break and close below. Is a candlestick wick on the daily time frame. If you go to the daily time frame, you will see that is a candlestick wick, right? You can see it here, meaning the market did not close below this zone. The market was still on the zone, so there was nowhere to actually enter a sell trade at that point. Now, how do you determine if the market is going to fake out or not? You look to the far left and see if there is a zone. If there is any zone close to, if there is any zone like the market is selling, if there is any support zone very close to where the market is breaking out from, for example, the market broke out from where we just drew, then the market started dropped a week up to this level, then bought back again. So let's look for a way to identify if the market there's another zone the market reacted to by placing a horizontal line right here. Let's put this horizontal line right here. All right, good. So now we go down to that same 4-hourly time frame. Let's go to the 4-hourly time frame. Okay, let's check on the 4-hourly time frame. So you can see this is a zone here. This is where market even started creating an impulsive correction. At this point, look at it. It's even where market started creating impulsive correction. So there was no way the market would just easily go below this zone just like that. It's a zone the market has been reacting with. So you can see that. So the market rejected this zone and started buying, backing, and closed into the range on the daily time frame. All right. So if you can be tracing this kind of stuff, it can save you from unnecessary losses in the market. Until the market went back and consolidated, you can see it consolidated here before selling nicely to the downside, and you can see the market couldn't even buy above. So these things are very important, guys. Let me show you something else. The market couldn't buy above this zone. Each time the market gets to this zone, it is consolidation here, so it rejects. The market rejects each time it gets here. So anytime the market is able to break above this zone, it's going to buy. Anytime the market is able to break above this zone, it is going to buy. And if you want to trace, you will notice that this particular zone here, the market must have respected it much later. You see, let's trace, but the market hasn't gotten to that level yet. So anytime the market gets to this level, it will respect it. All right, the market will respect it too, guys. So it's very simple. So it's not something you can just I wouldn't tell you it's very easy to understand. It's not that easy, but you need to practice it too so that you can master it. You understand? So when you keep on practicing and trying to draw these zones and lines, it will help you a whole lot. Once you notice market is consolidating around the zone, around the particular place, try to draw a line, and also consider the wicks the market has created around that zone. And also take note of this thing I mentioned here. You can see the line we drew down here. The market has been closing below this line, The market has been opening and close. The market has been closing below this line. So the body of the candlesticks has have been below this line until this one, which closed above. This one is this was an indication the market will soon be buying. So after two candlesticks, the market finally broke out of, and this was the major zone. So even after marking out this one, take note of this major zone here, because this is where the market has been rejecting mostly. All right, take note of those things and you will see you'll be happy. All right, that is it, guys. You can practice this on any time frame, on any type of pair, and the more you do it, the better. Is, they say practice makes perfect. All right, so click the link in the description of this video to join my Telegram channel, and also the challenge program is already ongoing. There was an offer for just 20 USD for those who did not participate, just because of I was overjoyed yesterday evening, so I decided to give that opportunity to only 5%. So if you missed the opportunity to join when since Monday, you can join now, and it is the offer only lasts till Saturday. Saturday is what date? Today is 7. Saturday is 8. All right. Midnight of 8th of January or February. After that date, that time you can't join again, guys. You can't join. You need to concentrate with those I have. All right. So if you miss the opportunity and you can quickly join, then there's a chance to do that as soon as you can. Just 5 persons, more than 5. I won't take. All right, so like this video, share your thoughts in the comment section, and then subscribe to this channel if not done that yet. See you guys in my next video. Stay blessed and peace out.